RMI is an insurance investment holding company with significant holdings in of MMI, OUTsurance, Discovery, and RMB Structured Insurance. And of course, Lance Williams, so this is his preferred entry into the FirstRand.
I think it was
RMH.
This is
it
RMI.
Was RMH. This is RMI.
Because remember, these bits came out of the reorganization of the FirstRand group and the Remgro stake and so on and so forth. But
I stand corrected. You're absolutely right. This is RMI.
Entity which Herman Bosman is now the CEO of, and it's been a very interesting move. I think they're transitioning themselves into a slightly more active investment holding company at this level.
Market cap, 58.9 billion rand, a PE ratio of 19.8 and a dividend yield of 2.9%. RMI?
So
just a latest...
There's the share price graph, actually.
Yes, and you can see it's done okay, but a bit of sideways movement recently. Another recent change has been selling RMI Structured Insurance to Sun Tam and investing into Hastings, which is a significant UK short-term insurer. They bought just under 30% over December, which is quite interesting.
At least they bought it after the Brexit impact, although we haven't seen the ultimate follow-through on Brexit, but maybe the timing was better than some of the other acquisitions we saw before Brexit.
I agree. The one issue is higher long-term bond rates in the UK. That's the one issue. Where long-term rates, it's more significant and could be a bigger issue for long-term insurance. For short-term insurance, it could technically be a net positive because of the amount of cash they have on the balance sheet. So higher rates means higher earnings on the cash balance, but it's something to keep an eye out. And then if you don't know what the Ogden rate is. Now the Ogden rate is if in bodily injury claims, it's the rate that insurers in the UK use to discount their long-term bodily injury claims. And that rate at the 31st of January this year will probably come down by a full 100 basis points. That could be quite significant for these players in the UK. Less so for Hastings, more Admiral and Direct Line, but still something to keep in mind of. And that was maybe the opportunity that allowed RMI to buy into Hastings at a reasonable price.
Paul, have you got anything to add? That was, I mean,
well,
that's a slam dunk.
Let's just back up the truck here, because remember what you get when you buy RMI, more importantly than the new stuff that they're doing with respect to Herman Bosman, is the 25% stake or thereabouts in Discovery, which is worth a lot of money. The 25% stake in MMI, which is Metropolitan and Momentum MMI, you know, that's big in employment benefits and life insurance and so on. And then, more importantly, probably than both of those, is the 90% stake in OUTsurance, you know, the pointsman and the direct selling model, which is here in South Africa as well as in Australia. Those are very, very strong businesses. Just right there giving you the 60 billion rands worth of value.
And of course, MMI you would be able to access directly
as
and
would Discovery, but not OUTsurance.
So there's your
I mean, what is the value
add.
split? How much of the total is OUTsurance? What do you think OUTsurance is worth?
Roughly, OUTsurance is 45% of the business.
Wow.
And then 25%, 20 to 25% would be each of MMI and Discovery, and then a little bit of the asset management business and the Hastings business coming in, and then some debt against that now.
And how well is OUTsurance doing, and what do you feel about them as a direct investment then?
It's probably one of the best companies in South Africa. If you look at where they came from, where they are right now, the cash generating capability, the ROEs, the fact that they got an Australian operation up and running in a short space of time to be even more profitable than the SA business today. Some short-term headwinds, once again from weather, which is understandable. And
have you been in this one?
Over the long term, yes. Most recently, I've sold out because of valuation levels once again. I still have a little bit left. I didn't sell everything. The Hastings deal, I think, could be a good one. But OUTsurance is the gem in this whole package. And as a hedge fund manager, you can also sometimes then get more exposure to the gem by shorting out the other bits.
I'm more interested in terms of what would make you buy in again. As you say, valuation looking a little bit expensive here. You still got a small stake. But what would make you go in heavily into RMI?
Sure, I think a lower share price firstly. So say below 37 Rand, that's the obvious answer. But then secondly, OUTsurance will come out with some results in the next while, and that could give us an indication how bad the weather has been in the fourth quarter of 2016, which seems to be anecdotally quite bad.
So I actually need to rephrase my question because it sounded really, really simple there. What I was saying is that, is it going to get cheaper? Because, you know, and perhaps that's what it is that it's the weather elements and the fact that there is risk that isn't priced into the stock. So you do deem the stock to go cheaper in the near term?
That is the million-dollar question. And once again, to think what other investors are doing and whether they would sell it down because of the tough short-term impacts that the business will face is an unanswerable question, effectively. So instead of worrying if other people are going to make it get cheaper, what I do is I say, well, this is the price I want to pay, 37 Rand 50, say. If it's above that, I don't buy it. If it's below that, I do.
So
it's
you
above
eliminate
that, so
the
not
emotion
buy.
from the
Yes.
decision.
I got another question, and that is that the shareholding here is the big chunky stake from Remgrow, and then also the RMB founders have got stakes as well. I'm not going to see any movement there probably. What about a reorganization of the group? Do you think it's at all possible that they may elect to unbundle MMI and Discovery and give one more direct access to the OUTsurance model and the other things that Herman is doing?
I don't see any reason for that. They've got the Royal Bafokeng Holdings in there as well. I think
Yeah.
there's a lot of opportunity with BE to do something more. And with the Hastings pillar, it shows that they, in their own right, want to be an investment holding company, an active investment holding company. So instead of unbundling, I'd rather see
the
that they
cash
could
flows,
build
yeah.
out the portfolio.
Yeah, and they're on the board of those underlying entities. So.
Hot or
Hot or
not?
not?
For the long term, this company is hot, but once again, similar to
You
the
gotta buy it at
previous
the right
one, for the
price.
short term, the price isn't right for me.
Well,
Not hot.
then by extension, I have to go hot on this one as well, since I like the overall look of the short-term market. Yeah.